Welcome back to another Coffee with Samso. Today we are back at the UWA club here in the University of Western Australia in Crawley. We're going to get OD6 Metals back on the platform. Brett Hazelden, the MD, will be giving us a rundown on what's been happening and whether OD6 is actually better placed today on the market for value growth than, say, even 2 years ago when we first introduced OD6 while the rare earth market was booming at that time. The conversation today really centers on a change in market sentiment for the rare earths, as well as a fundamental shift in the flow sheets for OD6 metals. Brett will run us through how the extraction process has changed and how that could bring a game changer in terms of the path forward for OD6 and its clay-hosted rare earths in the southern parts of Western Australia. We will also discuss whether the changes is a reagent change, a fundamental change in recoveries, impurities, and selective mining concepts, and what this path means to the market in general. Effectively, the conversation hopefully will be all about OD6 and its rare earth projects. We will touch on its other projects in New South Wales as well. Before we head off, I would like to take this opportunity to get you guys onto the Samso platform. For all those who are not subscribed to our YouTube channel or are following us on socials and as well as our website, please do. It does help us to bring organic and independent content to you guys. And also we have a support page, so please do visit that. You can help us by supporting us on as a one-off or on a monthly basis. As we say, we are just trying to bring this content to you guys out there in the most economical way. So without further commentary, please do grab your favorite beverage, sit down and listen to the next Coffee with Samso. Thank you. Welcome to another Coffee with Samso. As we said, I've got Brett Hazelden here with us talking from OD6 Metals. So welcome back, Brett.
Thanks for having us back. It's been a while.
Been a while, but finally I'm getting you back. So we've got some really good things to talk about this time round. Been a while, so let's just give us a quick summary for those that are new to us, and then let's get right into what's happening at OD6.
Yep, so OD6 has got two projects now. So we started off with one 3 years ago, which was a rare earth project. We acquired another copper project late last year. So we've now got those two Australian-based projects. So the rare earth projects just continued on with the workflows that we've been doing, mostly around ANSTO and metallurgical testing, which we can obviously go in a little bit more detail, getting products out, ready for obviously off-take discussions. And then on the copper side of things, we've done our first round of drill program out there, proven that there's actually copper under the old mine site system that was there. That was mined over 100 years ago. And now we're out there literally drilling as we speak with our first hole out of 7. So hopefully some good results coming out of that.
I mean, when you guys are basically rare focus, the market sort of didn't go according to plan. You brought in the copper project, and I think now there's some sentiments coming back, and you've released recently some technological advances for yourself, and now you got a nice balance of a good copper project as well as rare earth, as you mentioned. Yep. Can you walk us through the news that you guys put out recently in the last 3 weeks or so?
Yep. So rare earths has obviously been on the main focus for us over the last period. We've never lost focus on rare earths. It's always been our flagship project in terms of the Splinter Rock project. It's got 680 million tonnes out there. That's only about 10% of the clay basin, so there's billions of tonnes out there. So we could go chase tonnes, but that hasn't been the focus. More tonnes doesn't equal anything really. What we really need and what everyone's shown is about 5 million tonne per annum of processing facilities. So you need 120 million tonnes of good stuff, which is what we've got in an indicated resources and inside centre, and that's 20-year mine life there. So our focus has then been, how do you get the metallurgy right? So the metallurgy's been an interesting journey. We've always been able to leach it. When we first started talking 3 odd years ago, there was no Brazilian projects really coming in. You had MEI, etc. All those guys come through the process. A little bit higher grade, different philosophy as well. So they advanced through the process fairly quickly, and then what we saw is the capital costs that were coming out of tank leaching was quite high. So we're talking 300, 400, 500 million US. So big numbers when everyone was talking 200 to 300 million. So what we had to do is, and what we're doing in parallel in any case, was continuing to look at how do we do it smarter, how do we do it cheaper, how do we do it, make sure that you're economic in the long run, no matter what happens. So all the announcements over the last 2 to 3 months have all been metallurgy focused. So 12 months worth of hard work with ANSTO, just slogging through lots of different tests, lots of different trials, all around a heap leach process, which we've figured out is cheaper and higher recoveries. But we've also been able to optimise it to get a really good product. So we've thought about how do we get a good product out that we can sell all around the world and not just to one part of the world.
When we had this discussion prior to we started recording, obviously, my question was, how did it go from its rocket science to heap leach?
Yep. And
can you walk through that thinking?
Heap leach was always in my mind something that was going to struggle, personally. I've got a metallurgy background, just for viewers to be reminded, but clays with a heap leach, you'd think the percolation rate won't work quite right. So we ran the test with both tank leaching and heap leaching in parallel. And tank leaching, for people, for a bit of a reminder, is a bit like gold processing, where you stick it in a tank, mix it all up. But the main difference there is in gold, you can put a carbon atom in there, which sucks all the gold out of the solution, and then you can take that out. But in rare earths and tank leach, you need to do solid liquid separation. You need to wash the clays. It's high power, high intensity in terms of removal processes. Heap leach, we sort of ran on the side, and surprise, surprise, it actually came out with higher recoveries, and takes about 70 days, so it's not quick, but it had high recoveries and similar acid consumptions. But what it does, it just removes tanks, filters, a whole heap of power, a whole heap of clay washing, a whole heap of downstream equipment that you don't need. So suddenly, where Brazilians are sitting at that 300-400 million US mark, where it will be sitting somewhere less. IXR is an example out of Uganda. Their heap leaching project was 120. So I don't think it would be that low. I think that's a little bit optimistic, but that's where we got to.
Is there any environmental issues or offset that, because now you're heap leaching as opposed to tanks and things like that?
No, so look, heap leaching has been done in Australia for a long time. If you're doing in situ leaching, that might be a little bit different. So heap leaching is virtually putting it on a whole heap of plastic pads and then continuing to move down a plastic pad, reclaim back off the plastic pad, and then stick it back into the mine. So no real different to what we were looking at before, but we don't need tails dams. It's all dry and it's easier to handle. The thing with heap leaching is we do keep on obviously putting on fresh acid on the top. So that then allows, and we can keep on running it through a 70-day process, but it allows it to continue to leach over time. And we actually haven't met the full leaching potential yet, and we're getting 75-80% recoveries.
4th of August, you had an announcement saying, got this nano-filtration, cutting acid requirements by up to 80%.
Yep.
I mean, that's a lot. That's a big number, right?
It was a big change for us. So a lot of the concerns when we were first around and when we spoke to investors about tank leaching, you're not using Amsol, it's going to be more expensive, you're using an acid at pH of 1 or 2, and yes, it's going to use more reagents than some of those. So for us, not having that solid liquid separation step in a tank leach, whereas a heap leach comes out relatively clean in terms of liquor, we can then put it through this nano-filtration. And what's nano-filtration? It's a bit like a desalination plant where it goes through a filter and it separates off sort of light elements or small single ion elements from the larger 1 or 2 plus ions. So effectively allows us to recycle 85% of the acid back through. Massive saving from reagents for us. But what it also does is it drops the volume of liquid reporting downstream by about 70%. So that's a decrease in size on everything that you need to install going forward. So the impurity removal circuit and then the precipitation circuit. So it's a big saving.
I mean, heat leaching obviously one of the key components, and I'm not a metallurgist. I'm probably one of those guys that really irritates all professionals is asking these questions. But it's all about consistency of your material, right?
Yep.
So how confident are you about the consistency coming out of the ground?
Yep.
For your process?
So if you looked across the whole 680 million tonnes, there's obviously going to be lots of different changes. Where we've focused in is inside centre. So inside centre's got 120 million tonnes at over 1,600 parts per million trio. It's a big, thick ore body. It's got about 10 metres of cover and then about 70 to 80 metres of very consistent ore as such. It's quite, you probably can't call it ore nowadays because it's not a reserve yet, but it's a deposit. It's consistent all the way through. What we do see is as it goes down in depth, there's a little bit of change in terms of potassium levels, but everything else is right. So what we'll see is, and we're about to do all this test work with ANSTO in the scale up work, is we'll test the top 40 metres versus the top below the bottom 40 metres, slightly different. But that's probably the only variation that we've seen.
So is there consistency concerns, or is there material, physical amount of clay, penetration of the liquids and stuff?
Yep, so heap leach, it's about percolation rates. So if you put a 10 metre heap leach pad on there, it's probably going to compact up with a whole heap of clay. So there'll be a size that will be probably between 3 to 4 metres high. That will be the optimum one where it doesn't compact itself up. There'll be agglomeration works that we're actually doing with ANSTO as we speak, where we're taking 2.5 tonnes of material that we've just drilled, so bulk core, and we're putting it through their column testing processes. But we'll be looking at, do we just need to add a flock, or do we need to add an acid, or do we need to do anything? What's the actual size fraction of the rock that's most appropriate as well? I've seen people crush things in heap leach and you're just adding extra costs and things you don't need to do. So look, a lot of that scale up test work's coming, but the work that we've done to date says it works. It doesn't actually collapse, it doesn't block up, which is a good sign for us.
Looking at OD6 from a investor point of view, I mean, the narrative out there today is that suddenly rare earths is like hot potato, right?
Yeah.
And looking at your market cap, I think it's 12, 15 mil, something like that. That investing proposition suddenly is light bulbs coming on and thinking, everyone's talking rare earths. Our friend in the US is pumping, he's going into Greenland and that's going berserk. And how is that affecting your thinking or management thinking, company thinking, of how to play this card? Because obviously I think you're almost the last man standing from 2 years ago.
Yep.
And you've done obviously all this work that we just discussed. How are you going to play this card?
We've always worked on what's the product that you produce. So we've been able to produce MREC, which is a high quality MREC. So anything above 50% is good. We've got a 56 to 59%. So, but the key is we've seen Serra Verde out of South America that's had issues with uranium. So it's hard to sell other than China type stuff or transport. So the card that we've got to play is we produce a really good product. So technically we're really smart about it. Probably what we now need to be doing is the offtake side of things. How do you play the government side of things as well? But I think you've got to be careful as well. So there's a lot of people that will pump up their share price on lots of non-binding LOIs and things that sound good to an investor but don't mean anything. And I think you've got to be careful not to get down to a path that the government props up an industry that isn't survivable in the long term when the government actually then removes it. So our focus is getting a high quality product that can be sold to lots of people, but then also sold around the world as well. So you're not reliant on China, you're not reliant on Australian government propping you up, you're not reliant on going to France or any of those ones as well. So for us, it's an interesting question. We need to probably be playing the market a little bit more like a lot of other people are and try and get those non-binding indicative LOIs, which is what we're looking at now. But I think the first basis is make sure you technically work in all conditions and that you potentially are economic in most conditions, because as we've seen, prices for rare earths, they've gone from $120 to $130 a kilo NdPr when we were talking 2-3 years ago. They went down to $50 a kilo NdPr. Linus was only just making money. Mountain Pass with a 6% hard rock rare earth trio grade they were losing money for the last couple of years. So with the US government now coming in and putting $110 a kilo floor price in there, that supports them, doesn't support anyone else, but you just need to be conscious of where things are trying to position, and that the Western governments are now trying to get two different supply chains going.
I think one of the things that we should actually emphasise is too that the heap leach process doesn't work on everybody, right? And
Correct,
I kind of queried you before is are you unique in terms of your met? Is that something that is special to you guys?
Yep. So heap leaching, so rare earths, whole heap of different spectrum of different minerals. So Linus can't use a heap leach because it's all contained in monazite or apatite or other hard rock minerals, so they need to be cracked and leached at high temperatures. We're a little bit different. We're an old granite formation that's been highly weathered over years, so the monazites that were there have been broken down into different minerals that are now easily leached through a heap leach. Whereas if you've got an apatite or something in some of the other ones that might be around, they can't be leached easily with a heap leach. So we're unique in terms of mineralogy, which then allows us to have an advantage from a heap leach point of view.
Yeah, I think that's very important because from a technical point of view, long term, I mean, you are getting your metals out,
Yep.
but at the same time, the market will hopefully shift more in favour of you guys. But definitely the narrative's out there, and suddenly everyone's talking to rare earths. Whereas, not long ago everyone's talking lithium and then gold and rare earths, and gold's
The fundamentals for rare earths are still there in terms of supply demand. If you believe all the EVs and robots now that people are talking about, so we still technically need another 10 mines.
Yeah.
But the price doesn't support it at the current prices.
Yeah.
The super high grade mines can survive. China's obviously doing their thing with retaining as much control for as long as they can. But at some stage, the world needs more mines.
Yeah. Moving on to your Gulf Creek copper. I mean, New South Wales, you've had one drilling program, and then I think you're drilling as we speak.
Correct.
Do you want to run through that?
So Gulf Creek copper, obviously rare earths were down the last couple of years, so we added in a copper project. Late last year we acquired the project. It was mined over 100 years ago, so 1896 through to 1912 I think it was. The only reason it stopped, it wasn't because it ran out of ore, it was because of the prices at the time. And you go back 100 years, it was all horse and cart, and they had to get to the nearest railway head, and they were smelting out there. There was a whole heap of things that obviously conspired to shut it down at the time. So there's been no modern day exploration on it other than 2 holes back in the 60s, so 2 drill holes. No other drill holes have ever been in there except in the 1960s. And now we're obviously out there with geophysics. We're looking at what is the continuation there below the mine, but also are there repeat structures. So from a geological point of view, it's a VMS system, so volcanic massive sulfide system. To put that plain simply, it was formed on the sea floor with a whole heap of volcanoes spewing out at times, and then it's been thrust up in, obviously, to the ranges that are through New South Wales there, and then moved and changed around. So generally with those systems, what you see is an area, and then you see multiple repeat structures. So what we've tested to date and we've confirmed is if you go down dip of the mine, there continues to be a continuation of the mineralisation. So that's ticking the box 1. The other one that we've confirmed is that the mineralisation is associated with a magnetite. So from a geophysics point of view, what we can now do is target geophysics methods using magnetism effectively to then see what other magnetic signatures are out there. And then what we see is there's the old mine that was sticking out of the ground that they would have tripped over once upon a time when they were out there 100 years ago. But there's actually looks to be at least 3 repeat structures within that same area. It's never been tested, virtually green fields, but literally around the corner and continuing there. So they're called Big Bend, West Limb and Northwest. There's a beautiful cross section in our presentation that shows that. And then when you actually look at where the mine is, the old Gulf Creek mine, it's about this big versus Big Bend being that big. So 500 metres in height or depth in total profile, 200 to 300 metres in width, and we'll see if there's any obviously copper in it or whether it's a big basalt plug, but that could be a big feeder structure for what actually was feeding the one that exposed or was mined once upon a time. There's also some repeat structures further along there, but there's also another mine to the north which also has the same magnetic signature, which is called Murchison. We haven't done too much work on that yet. We're just proving the philosophy works out there, that we do get those repeat structures, and that's what we're drilling as we speak.
I mean, VMS is always, if anyone's been following my commentaries, I always love VMS because I think it's a small company, holy grail, because it's small enough for you small companies to test it, and which test it positively, it can be a very big system.
So VMS's, for a good example, is DeGrussa. So we always point out DeGrussa, that was a 4% with a bit of gold in there. This historically was mined anywhere between 2% and 12% copper. So it was a super high grade mine. We've seen that there's 4.6% copper on some of our drill results there. So again, we're seeing high grade. So instead of having hundreds of millions of tonne at 0.5%, we'll be looking at 10 to 20 million tonnes at 4% or something like that. And then suddenly it's a lower capex number because you only have to build $1 million concentrator. So they are a beautiful company maker if you can find the right ones.
If you find a DeGrussa, I mean that's a company maker in itself. It's very small relative to the big numbers. Everyone wants big tonnage, but they don't realise that they forget the big tonnage that the porphyries they're like 0.4, 0.2, 0.3%. Whereas if you're talking 4%, it's magnitudes more.
And once DeGrussa was found and started mining, it went straight up to $1 billion market cap. And I think if you look at Sandfire today, they've managed to get a couple of other projects in, but they're a $7 billion market cap company from a little VMS system. So, hey, look, be nice if we have that. And we're out there drilling the holes on those repeat structures now. So with any luck, we can report some good news.
I mean, Firefly is the best example. They've got a VMS up in Canada, and they're nearly $1 billion market cap. Yep. You know, they're getting mineralisation down deep, like several hundred metres. But that's how big one can get if you find one that.
Correct, yeah.
That's it, you know.
And key to that as well is, so we've done surface mag effectively, and AM, not AM, but surveys. What we'll now do is do a downhole EM surveys. So again, what you can then see is you can see within 50 to 100 metres around that hole.
Yep.
And then hopefully target it a little bit better, because I think people need to remember DeGrussa was found on the last hole.
Yeah.
And then suddenly
Cyrus and everything else.
So you can miss it by that much, but hopefully we don't miss it. Hopefully the first hole we put in there in these repeat structures hits it nail on the head.
So in that part of the world, how's your land access going? Is that you're getting that through?
Yeah, so we've had no problems to date. It sits partly on Crown land, being an old legacy mine, and partly on farmland. So the farmers out there have been really great with us. I was actually just talking to them on Sunday. I've just come back from over east, looking at the project, making sure it's all set up properly, and they're supportive on us. There's a town there that is called Barrabar, which is the closest town. It used to be a semi-mining, semi-rural town, and it used to have Woods Reef, which was an asbestos mine out there, and the town used to be pumping off the back of that. So the guys that we've spoken to in town over the last sort of 12 months would love to see a new project in there and getting back to those glory days.
I mean, that is a mining area. People forget, right? In the olden days.
Correct. There was multiple copper mines all the way there. It sits right on the Peel Fault there. When you talk to the geos, it sits in that beautiful little area where everything mashes together, and you should be seeing VMS systems.
Yeah. Look, I mean, I'm really interested in what you guys are doing with the rare earths, and obviously that's only based entirely on market sentiment at this point in time. And obviously it's good to see that you guys are actually showing you can get your metals out, which I think was one of the biggest problem 2 years ago, right? Yeah. Everyone was in this game, but no one had that.
It was the clay of the day that used to keep on coming up. Everyone had a rare earth show with some clays in it, but no one had a technical solution, or it was never recoverable. So a lot of the dross, I suppose, is probably the polite way it is, dropped away. We've kept focus at it. We've never lost focus, and we're doing all scale-up tests now. We're doing off-take agreements, off-take discussions, and we'll be doing all our studies. The question is, what price do you put on the forward-looking prices? And I've seen some shockers really, where people are putting out $200 a kilo NdPr. So 3 or 4 times the current price, which has been sitting about $75 a kilo today and was as low as 50. So we'll have to put out a series of different prices just so people can compare apples with oranges, but some people are putting out those big numbers, some people are putting out lower numbers. We'll have to put out something around spot price, $110 a kilo, and maybe something that sits around 140 or 150, which is where some of the forecasters are putting it.
So that benchmarking diagram you got on in your presentation, I mean, can we take that and say that's where you sit relative to the rest of the market in that sector?
Well, there's a mixture on there. So what we did with that one is we tried to show a mixture of heap leaches, tank leaches, in situ leach, and also hard rock shows. So they're all slightly different in their mineralogy. They're all slightly different in capex. You go to the hard rock guys, ARU for example, $1.2 or $1.3 billion in capex. If you go to the other end of the scale, the heap leach with IXR was about $120 million US. There's a whole heap of differences in grades there. There's differences in recoveries. I think IXR was only getting about a 35% recovery versus our 75% recovery. And it sort of balances itself out in a lot of those ways. But the key for us is we want to be a $300 million capex type show instead of a $1.2 billion, which is easily fundable. And look, the government should be getting behind small shows like us that can still produce nearly as much as those hard rocks, but for a quarter of the price. That's where the government should be funneling some money.
Are you booking tickets to the States to visit your friend?
I think we'll be on our list along with France, and if you look at Neo Metals, who's Canadian guys that process the downstream parts, they're based out of Canada with a project in Estonia that do all that. I think the other thing that we'll look at, and we haven't got to the detail yet, but with ANSTO we can take it one step further from a mixed rare earth carbonate. We might be able to produce selective oxides. So we might just produce an NdPr oxide, which suddenly takes your payability from that 70-75% to 100%, and it allows you to then deal with magnet makers directly. So there's lots of big magnet makers, especially in China, but you see Linus recently just announced a deal with a US magnet maker. It just sort of cuts out a middleman along the way and changes your profile.
I think at some point in time, how this business works will be different to what it was thought to work in the past, because everything's changed, the dynamics change, geopolitics has changed, and they need to create a different market. Otherwise,
you need to be able to have obviously a diverse market, but equally we can have a mine, and most of the mines that would come up still have to sell it to China because that's where the magnets are being made. So there's not too many magnet producers outside of China, and there's not too many downstream metal producers either. So what the Western supply chain needs to do is build that whole supply chain, whereas China's put it all in one spot and done it very smartly. So that's where I think the governments need to sort of step in and help, but then we just need to look at where pricing sits, because pricing in the Western world won't be economic at the current prices.
I started the conversation saying, you're probably better placed for a position play for investors now than you were probably 2 years ago. At 12-15 million market cap, that's considered cheap, I guess, in these days.
There's a lot more upside than downside.
Well, you do now, definitely. I mean, and the good thing is you've got. This is my view that your rare earths is going to take time to develop. It will take time to develop, and you're not going to have big spend other than to develop that story and establish the market and everything else. Then you got the upside of where you're drilling in New South Wales is if you get a good VMS happening, then you might have to spin one out eventually, but the value will be there. So it gives us, from my point of view, a big upside there, because that lift would be massive, right?
That's right. You can play the upturns and downturns on both markets. And look, copper's, everyone's been talking, copper needs to keep on going up in price. It should be a lot higher than it is. It should be like gold going through the roof. But it's gone through $10,000 a kilo, which is, or $10,000 a tonne, I should say. So that's pretty special, and a lot of people are forecasting $15,000 a tonne. So I think if we can have two plays running at the same time, they'll obviously be competing for capital, but I think it's a good thing for the next few years at least.
I'm sure your shareholders wish that one was a gold play as opposed to a copper play for obvious reasons. But you know, I think it's from a long-term play. It's a better balance now than before, as usual. How's the capital market treating you guys from that point of view? Obviously, I'm thinking, oh, this is great, 15 mil. I sit there, let's see what you guys come up with.
Yep.
What is the capital market? Because they're a bit more. They can be very impatient, yeah?
They can be impatient. I think they also forget every now and again. So we've been out there. I've been through Sydney, Melbourne, Perth, up to Hong Kong most recently. We're into KL for a rare earth conference in 2 weeks' time as well. It's continuing having to remind people that we're here and that we've actually been doing good work. Obviously, we went a little bit quiet over the last 12 months getting through all that metallurgical test work program with ANSTO because it just takes time. But now we're back and we're saying, look, we've actually done some really good work here and we're more advanced than most people that have been through the same process. So yeah, look, it's...
Yeah, I'm very curious to see how this space works for you guys now, because obviously, because I followed this rare earth sector for you guys, especially for the last, well, since it started, or perked its head up,
Yep.
you could say. Now we're at a different stage completely to before. How this manifests to hopefully something is the interesting part for me.
I just hope a whole heap of investors don't get burnt by the whole process, because there's still a few projects out there that are obviously spruiking themselves up, but again, it's a long road and you need to work diligently about what the end product's going to look like, and not take on the theory that I'm going to be taken out by someone. Out of the US at the moment, you see people with rock chips and they're suddenly $30-40 million market caps. It's a little bit crazy. I think there's a bit of herd mentality happening there. People make some quick money. But if you're there for long term, which is what we've been for the last 3 years, you need to do it right.
Yeah, I think you can only say it this much because everyone's different in thinking, but you know, we are decades in this industry. What I've learned is that the guys that can deliver the product eventually will be the one that's left standing, and then rock chips, man, they're everywhere, right? Yeah,
to get a mine into production nowadays, it takes 5 to 10 years. Correct. So if you've got a rock chip, well, you're not going to be in production probably for another 10 years, most likely, if ever.
You might not want to drill just in case you might not get anything.
That's right.
That's the thing. But look, last words, you know, to why should someone jump into OD6 in some states?
Yeah, look, I think obviously market cap, we're low market cap, so there's lots of upside there. There's obviously a political hot potato going on, and I think that will continue for a fair while. So with us continuing to push up and go through our study processes with rare earths, we can only benefit from a lot of that work that's happening around by the governments around there. So I think there's a great story from a rare earth project, which is still our flagship. But equally, what I see developing is if the VMS system in Gulf Creek over in New South Wales shows to be those beautiful repeat structures, that could be another De Grasser and a play by itself, as you mentioned. So I think that's a big upside for us. If we get some really good hits in the next couple of weeks, then that will be a big re-rating for the company itself.
Look, I'm not a shareholder of the company yet, but I'm not trying to heavily promote, but I as I said before, great interest in your rare earth side of things, to see actually someone able to show that you can deliver, get the recoveries and things like that, because I think everyone else that I've looked at before has kind of fallen on to the side, apart from the main guys that's still doing it, you know, your liners and things like that. But and I've been trying to get you back here for a long time, and finally got you back. And look, Brett, thank you, and we'll keep following you guys and see how we go.
Yep, watch the story. Hopefully it continues to progress quite nicely.
All right, thank you.